IA Private Wealth. Good to see you.
Morning.
Getting a lot of questions about this, I would imagine.
For a while now, yes.
Yeah, and just in terms of the mechanics of the market, because we haven't talking about this for a while, is this just the fact that maybe people weren't sure if we'd actually get to this point, and now they have to recalibrate on what this means in the short term here on a Monday morning?
I think a little bit of that, for sure. There were a lot of people that I did speak to. They said, oh, this would never happen. He couldn't go through with it. The president, there'd be a lot of pain felt on his side. Well, I guess a tweet that went out over the weekend saying that the Americans would feel pain, and I guess they will. There's a lot of calculations being done based on how much GDP will be taken off, how many jobs will be lost on both sides of the border. There really is no winner, I don't think. I know coming into the studio this morning, heard on the radio people talking about, well, who are the potential winners in all this? And people were finding it difficult to find a potential winner. So I guess if you're an investor out there, I don't think you panic sell, right? I think you just kind of sit back and let the dust settle and see what happens. Obviously, there's a call this morning, as you mentioned, between the president and the prime minister. Don't know if anything will come of that. Things take effect as of tomorrow. And I guess it's just going to be a matter of how long will these tariffs be in place for? Will it be short-lived? Will it be drawn out longer? Will it be weeks? Will it be months? And obviously, the longer it lasts, the worse it is on both sides.
Well, that's the amazing part of this, is that, if all these economists' preparations on what this could mean, based on the information that is in front of us, take hold, it's hard to avoid a recessionary scenario. I mean, do you think that's the reality? I mean, if nothing changes and we're just in a heated trade war between two countries that just about everybody says is going to cause great economic damage, what do you think happens?
Exactly. I don't think it is avoidable. I think when you look at, let's say, 2.5% GDP taken off Canada, is what they're estimating. We're running at around 1.5% GDP growth right now. You do the math, there you are. You're in negative territory. So, but on the flip side, U.S. is also going to feel pain as well. They're growing around 2.5%, 3%. Maybe they lose 1.5%. So all of a sudden, they're getting close to the flat line. So. Also, the border states, right? You already heard from, Michigan, and you're hearing from other states. Kentucky, for example. I know the Premier Ford was talking to the Kentucky governor recently, talking about obviously what was going to happen, which is a boycott of alcohol. Yeah. And the Jack Daniels and all that. So, and Ontario, obviously, a very big purchaser of U.S. alcohol, to say the least. And that will hurt. There's no doubt about that. And so how long will this last? How long can the president take the heat from the different governors and the people? At some point, this will bite. And when it does, I think something will have to be done. The issue is it'll bite probably a lot quicker on our side of the border as compared to theirs.
Well, that's the thing. We are a much smaller economy, and obviously there's already been some uncertainty for our economy. Just to talk about the stock market for a second, because, in the face of this, the Canadian stock market was still faring well. We're well into a, S&P 500 bull market at this point. But this morning, you talk about booze. We've seen some of the booze operators, I think Constellation Brands, which imports like Modelo from Mexico, for example, was under some pressure. Analysts are trying to figure out what kind of impact this could have for their business. Already in the pre-market, there have been some easy targets like auto stocks. Everybody's looking at the supply chain. If it gets disrupted, the car prices go up. Does it make it less profitable for these companies to even be selling cars? So, people are looking at apparel makers, car operators, or car manufacturers, booze importers. But you're saying just hold calm for a second here and let's see how this all plays out?
Yeah, absolutely. The one sector that I think doesn't get much coverage, actually, funny enough, is technology, because we don't really hear how it's going to affect tech. And yet tech has been the one sector to drive this market higher for the last 2 years. What's going to happen to the likes of a Meta, a Google, an Amazon? How are they going to be affected? We see the NASDAQ down more than the other indices to start. Obviously, risk off. You start selling NASDAQ stocks, you start selling tech. But what will be the effects on these big cap tech names? I think that is something I'm going to be watching over the next few days or perhaps weeks as the tariffs really start to take hold, because that to me has been the biggest driver. And if you see the biggest driving stocks like Amazon's going to report this week, Google's going to report this week, AMD is going to report this week. What are they going to say? Are they going to make mention of what's happening and how it's going to affect them? Or will they just talk about their earnings and pretend nothing is happening? That, to me, is going to be important.
I'm glad you brought that up because, this morning, in currency land, they're talking about the U.S. dollar. They're not talking about Bitcoin, which is under pressure. But I think that would speak to the fact that cryptocurrencies are often treated in moments like this as a risk asset, and it's a risk-off moment in the market, so tech's under pressure as well. But I think a lot of people, it was literally a week ago, wasn't it, that we were wondering about what the launch of a successful Chinese AI chatbot to rival ChatGPT at a fraction of the price was going to mean for the AI infrastructure spending boom. Have we been waiting for a moment after a huge run-up in all sorts of risk-based assets, like a turning point? It's hard not to wonder when the good times might start to cool off, but is it worth having that conversation, even if it's, not necessarily directly tied to the tariffs, but that's a catalyst for people changing their opinion?
I think it is. I think whenever you have, it's almost like a coiled spring, right? And all you're waiting for is that one little catalyst to poof, to have the thing kind of pop a little bit. And, technology has been priced to perfection for quite some time. I just don't think that the DeepSeek situation, to me, is what actually it appears to be. We're starting to find out that maybe DeepSeek has a lot of NVIDIA chips that they've amassed, perhaps not to the pleasure of the United States, and maybe they've taken some of the technology from OpenAI. That's been a rumble that's been going around as well. So, and how cheap did they make their model? Again, that is called into question. So I just don't think that over the long term is going to cause a name like NVIDIA a lot of pain. I think, yes, the CEO of NVIDIA says things will become cheaper over time, and therefore more businesses will be able to get involved and have more AI at their disposal. And that's only going to mean more chips to be sold by the likes of an NVIDIA and AMD and others. So, I think that the tech sector has been priced to perfection for a while. I think any little catalyst to the downside would cause a bit of a sell-off. But I still believe that AI, we're in the early innings of AI, and I think it'll just get bigger and faster and more powerful. And the question becomes, will the U.S. allow these new chips to be sold or to go overseas to China and places like that? I know Jensen Huang, CEO of NVIDIA, was at the White House last week. Still don't really know what came of that, but we'll have to see.
We will certainly have to see. We'll also have to see what happens in the world of commodities.